Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year.
Let's go over the recap of the Fed meeting that Jerome Powell did, defending the central bank's decision to go big with first cut that happened yesterday, Wednesday. The Federal Reserve surprised Wall Street with half-point rate cut on Wednesday, bringing its target range to 4.75 to 5%. The decision was not unanimous as Fed Governor Mitchell Bowman called for a quarter-point cut instead. At his press conference, Jerome Powell called the rate reduction a recalibration of central bank policy, noting that the Fed will continue to make decisions meeting by meeting. Federal Reserve Jerome Powell does not see the risk of an economic downturn being elevated following the supersized cut. He said, "I don't see anything in the coming right now that suggests that the likelihood of a recession, of a downturn is elevated. I don't see that in continued. You see growth at a solid rate. You see inflation coming down. You see labor market that's still at very solid levels. So I don't really see how." Despite one dissenting vote on the Federal Reserve's decision to cut interest rate by 50 basis points on Wednesday, the central bank was largely on the same page about the decision, according to Federal Reserve Chair Jerome Powell. There was a lot of discussion back and forth. There was also broad support for the decision that the committee voted on, Powell said. The labor market is in solid condition and it is the Federal Reserve's intention to keep it that way with Wednesday's rate cut, Federal Reserve Chair Jerome Powell said. The U.S. economy is in a good shape. It is growing at a solid pace. The Fed's two remaining meetings for the year are scheduled on November 6 to 7 and December 17 to 18 through 2025. The central bank forecast interest rates landing at 3.4%, indicating another full percentage point in cuts. Through 2026, rates are expected to fall to 2.9 with another half-point reduction. It is possible that in the next meeting, they will still cut the interest rates. 50 basis point rate cuts are rare in recent history except for emergency cuts during crisis events, investor says. The Federal Reserve kicked off its rate cutting campaign Wednesday afternoon after a half percentage point reduction. But some investors believe the U.S. central bank jumped the gun with a rate cut that was too big, too soon for the current backdrop. If Jerome Powell cuts interest rate by 50 basis points, this is generally bullish for crypto. Lower interest rates increase liquidity and reduce the appeal of traditional lower yield assets, which can push investors towards higher riskier and higher return assets like cryptocurrencies. Cheaper borrowing also encourages investment and spending, which could further boost demand for crypto. However, market reaction can vary depending on other economic factors. As at the time of recording this video, Bitcoin is trading at around $63,000 per coin, and many other coins are in green today. As you can see, the markets are reacting positively to the Federal Reserve's interest rate cuts. And if you have been researching crypto, this is the best time to get into the market. Don't get into the market when everything has already been on the top. Don't get into the market when everything is at the top. You buy at the bottom of the start of the bull market, and when everything starts eating and going up, that is when you can start taking profits. Take your profit in stable coins or in your local fiat currency. And don't just follow anybody's word. Do your due diligence by doing your own research before investing into any coin. And there are tools that you can use to do this, like CoinMarketCap. CoinMarketCap shows you many coins, many narratives of coin. AI, you can see AI coins, real world asset coins, and so on and so forth. Stay safe out there. Like this video, share with your friends and loved ones that are new to crypto. Also, subscribe if you are new here. Thanks for watching. I'll catch you in the next one.